Hi, and welcome to another video here at Street Smart Options. Folks, tonight Jonathan's going to be talking to us about a technology company that was started back in 1992. It's a company that has been doing work in vending machines. So, again, very much what I say very often with our recordings is that Jonathan does not just look at the standard stocks that are out there, companies, that you recognize. He's going to be telling you about a lot of the companies that you probably never heard about before. And that's one of the reasons it's so paramount that you're a member of our free group. You can find us on Facebook at facebook.com/groups/Street Smart Options Group. And if you're looking at us on our YouTube channel right now, do us a favor and make sure you subscribe, because you don't want to miss another great video like this where you could be getting information that could really help you with your trades. Now, this was a post that Jonathan did in our free group on Facebook back in July 12th, and there's some really interesting information about this company. So I'm going to turn it over to Jonathan. Go ahead, Jonathan.
Thanks, Jim. Yeah, USAT Technologies is a company that provides cashless payment options for unattended vending machines and arcade games, laundry machines, things like that. They've had an up and down history. They haven't been successful all the time. In fact, I'll go take a look at the monthly chart here, and you can see from its IPO, which was in '99, it has been, it was a steady downtrend all the way into 2010. And then it seems like, or since then, they've kind of gotten their act together. And what really precipitated the recent rise since 2017 is that in late 2017, they purchased a company called Cantaloupe. And Cantaloupe provides a software platform and software solutions for vending machine management. So these companies can now, that own these vending machines, can manage their inventory better, can manage their restocking better, and they basically now have a complete package with USAT providing the solution for the payment part of the picture, and now they have the kind of a business operations solution too, so they can provide a complete solution to the people that own the vending machines and the vending machine routes. So interesting company, and the thing about it is, this is a blog post from USAT, and one of the things they talk about in the blog post is how brick and mortar retailers struggle because technology is changing the landscape, and that consumers want faster, easier, customized, and convenient retail experiences. And so USAT's point is that they can obviously provide this solution, and they are the leader in this area. So interesting company. Now, strictly from a stock standpoint, the reason we talked about it in our group was that we didn't know any of this stuff ahead of time. We look at charts first to find our possible opportunities. And so USAT has been an uptrend since 2015, and then based tightly in this area from late 2016 into late 2017, and a very low price stock. And institutions generally don't get involved in these low price stocks. So a company really has to do a lot of work to build out of this like low priced area, because the big names, big institutions have so much money to throw around. They're like a giant whale jumping into a small pond if they buy these cheap stocks. So a company really has to prove itself before the big institutions get involved. And this company is starting to get more analyst attention now. There's 5 analysts that follow the company. And the stock here, you can see that this was on this was in late 2017. So this was on the Cantaloupe acquisition. The stock started to move out on the people saw that there was this benefit of joining up with this Cantaloupe software company, and that USAT could offer a better solution and also save costs internally. And then USAT reported good earnings results, which was like kind of a verification of this purchase, of this Cantaloupe purchase, right? So big volume. That's what attracted our attention. Huge volume on that earnings report as it broke out. And then it consolidated up here. And this is just really constructive action in this area over here, where the stock for weeks on end, 1, 2, 3, 4, 5 weeks in a row, traded really tightly. There was some big buyer in there just accumulating shares in this, what is this, about the $13 share area. Some big buyer, maybe more than one, was in there with a bid, and that stock just stayed there, and they just stayed there with their bid, collecting hundreds of thousands of shares, millions of shares. This thing trades on the order of a couple million shares a week. So they were in there trading, collecting millions of shares in here, and we got interested. The stock started to emerge out here, and we got involved. And so following our involvement, now this is just July 12th, and today's August 16th. Not much has happened. Not much time has passed by, right? So the stock really hasn't had a whole lot of time to show its merit yet. And in fact, earnings are coming up next week. So if history's any indication about the response of earnings back here in late 2018, maybe we'll have a good earnings report here. And so it's a little bit of speculation ahead of earnings, to be involved in the stock right now, for sure. But you can hedge your risk by using stock options, right? So just in case there's a fluke bad report, your risk is limited with stock options. If you own the stock outright and there's a fluke bad report, you can lose quite a bit. But at least your risk is defined and limited with stock options. So in this case, we own it ahead of the earnings report, anticipating a good earnings report, and we're controlling our risk by the size of our position. And the stock, we recommended it over here, and since then it's trended sideways, retested its 10-week moving average, and has since made a new high ahead of the earnings report. So interesting company. Let's take a look at some of the financials with the company. And here's the, let's see, financials. Oh, lost the financials somewhere. There we are. So income statement, you can see that the company have been really good growth in revenues, right? They did $42 million in 2014, $104 million in 2017, fiscal year end 2017. But their income statement, net income from continuing operations, just been a struggle, right? Just been a struggle. Not much going on there, right? And also you can look at their cash flow into 2017, and you can see same thing, just a struggle, up and down. They had positive cash flow in 2014, negative in 2015, positive again in 2016, negative again in 2017. So this Cantaloupe acquisition is really a big thing for them. They see all kinds of synergies with that, and so do the institutional investors. And now, since the acquisition closed in the second half of 2017, so it's not reflected in this report here. But if we go to the quarterly, we can see that still this is cash flow. So let's go back to the income statement. Their revenues are still doing well, and their gross profits doing well, and their cash flow, net income from continuing operations, I should say, is still maybe being reflected here in the first quarter of 2000, or the quarter end March 2018. I think that's their third quarter actually, because this company has a fiscal year that ends mid-year. So in their third fiscal quarter, they had a positive net operating result, and so it certainly beat the pants off of analyst expectations, which is why the stock did so well. So if you go now to the analysts on this stock, there's only 5. It's still a low price company, so it doesn't have a lot of Wall Street following. And if the company can continue with its improvement, this Wall Street following will grow and grow, and so will the institutional accumulation, and the stock could have a lot of legs if they can continue to perform. So you look at the estimates here, and you can see that the EPS trend for 2018 is up a little bit, but notice they're reporting for their analysts are expecting a positive 2018 earnings. Now that's quite an accomplishment for this company, and they're expecting again a positive 2019 earnings. All right, so analysts really think that the company's turned the corner in terms of profitability. So it'll be interesting to see what kind of fireworks go off next week when this company reports earnings. Going to the website of the company, you can see this is their homepage, and on their homepage they talk about, their big thing on their homepage is 2 great companies better together, Cantaloupe Systems and USA Technologies. All right, offer one advanced and comprehensive enterprise solution for this vendor, for this remote retail marketplace. So interesting company. They have a lot of potential. We'll see if their management can execute on their promises. And so far in the last quarter they did, and institutions who've done their deep research or deep dive in this company have bought millions of shares. So we're in there for the ride. We'll see how it all works out. And that's all I have to say about USAT.
All right. Awesome, Jonathan. Thanks for that. So, folks, one thing I want to point out to you is information like this is free. You get it on our Facebook group, but the information that you're missing by not being a member of Street Smart Options may actually be the difference in whether or not you're going to be profitable this year and you're going to make the kinds of returns that you want to with your trades. If you go to our website, streetsmartoptions.com, you can literally join the Street Smart Options training and membership group for $99 a month. That's literally $3.30 a day. And if you can afford to go to Starbucks and have a cup of coffee, you can also afford to put yourself in a situation where you have actual training about how the stock market works and how to trade in it by someone who's got over 30 years of experience, who used to work on Wall Street and wrote for Forbes. That's my business partner, Jonathan Sherman. So if you haven't taken a look at our membership over at Street Smart Options, you should start looking at doing that now, because you are literally going to be losing money, each day that you don't have professional training. You don't have to get your professional training from us, but you should actually know how to trade in the market. That's all we have for tonight. Thanks for listening.